Everyone chases crazy profits, but what if the secret lied in keeping it simple? In this video, I'm going to show you how one-to-one risk-reward ratio turned me from unprofitable to profitable, and how it might just do the same for you. So let's dive in.
Okay guys, so 1-to-1 to 1 to 1.5R completely transformed my trading, and this is how. Now 1 to 2R you would expect to be a more profitable system. Obviously it comes down to win rates. All the trading literature will tell you that higher risk reward, lower win rate is the way to go, and that's not necessarily the case. It depends on what you're trading. If you're trading prop firms, challenges, if you're managing live capital, it all depends, and I'm going to show you how here. So each system listed on the left hand side, 1-to-1, 1 to 1.5, 1 to 2. The win rate I've put at 85% for the lower risk reward, and then the higher risk reward I've reduced it to 65%. And I've just run some basic Monte Carlo simulations just to see what the returns would be. I came up with kind of an average, and I did this last column here will show you your average over 100 trades at 1% risk. So system 1 generated a 70% return, system 2 generated an 87.5% return, and system 3 generated a 95% return. So just based on those basic simulations and these figures here, based on risk reward and win rate, the 1 to 2R system will produce the best return. Simple, right? So least profitable to most profitable. Now that's exactly what the literature says, what the textbooks say. You only need to win 50% of your trades at 1 to 2R and you're profitable, even 1 to 1.5R and you're profitable, or you need to win 55% of your trades at 1 to 1R and you're profitable. But how does this all translate, especially in prop firm terms? Well, let's have a look. System 1, 85% win rate. Your expected return is 70%. Your average max losing streak is 2, but your 95th percentile of losing streaks is 3 or 4, and your likely max drawdown therefore is 3 or 4%. But your 1 to 2 system, the other end of the spectrum, your likely max drawdown is 6 or 7%. Now, obviously, translating to consecutive losses, your least losses come from the higher win rate, your most losses come from the lower win rate, higher R system. There's a big element of psychology that now comes in because the lower win rate system is harder to manage. It's harder to manage because it will batter your psychology. When you start losing trade after trade, you start to deviate, strategy hop, etc. Now, although that system produces the most return, the most money, the most percentage over the course of 100 trades, it might affect your psychology more, but there's more to it. How does this all look on a prop challenge? Now, everybody nowadays, all the students I mentor, they want to trade prop firms, and I teach people how to trade prop firms sustainably. So if they have passed a live prop firm, how to maintain that and make a good return on it. But I also teach them how to trade the challenge phase, and the challenge phase is completely different to trading a normal live account, to managing money. It's not really trading, it's trading gamified, right? So 100k challenge at 1 to 1R. How does this look in terms of charts and graphs? Well, I put together some simulations again in terms of drawdown. Now this one here at 1 to 1, 85% win rate, you finish at a 14% return over 20 trades. That's with 1% risk per trade. Your average, your max drawdown here, so your worst max drawdown in the simulation was 7%. So it's pretty high. You know, we've gone into some bigger numbers now. Rather than just using the 95th percentile, we're actually looking at the worst max drawdown, which would come from our Monte Carlo simulations. Now this one at 1 to 1.5R, 75% win rate, saw a max drawdown of 8%. So again, pretty high. You know, 7% is high, especially on a prop challenge. Some of them allow you maybe a 6% max drawdown. That's blown at that point. But the biggest thing I want to emphasize here is the max drawdown that comes from a 65% win rate, and it's 12%. Now that's definitely a blown account. That's a challenge failed. That's a live account lost. So you'd have to adjust your position size accordingly, trading this system. But if you look at the return of all the systems, the middle one actually produced the best result in this instance. And this will vary every time you run the experiment. Obviously, these results will vary. But this system was the least profitable over a short sample size. So over 20 trades, this system was the least profitable. And what we have to remember is when we're trading a trading challenge, we're trading a short sample size. We're not trading 100 trades. If you're taking 100 trades to pass a trading challenge, unless you're running like some scalping system, algo or whatever, if you're trading as a day trader, like 1 trade a day, 3 trades a week, whatever it might be, 100 trades is going to take you forever to pass a prop firm. realistically for me to pass a challenge, I want it done within a month. I don't want to be trading it past a month. 3 weeks ideal, right? So moving on. Typical versus worst 100 trade runs, and this is where it differs. This is the difference between trading a prop firm challenge or even a prop firm live account, to be honest, because your goal with a prop firm live is just to get paid. And I know very profitable traders that would easily hit the drawdown threshold on, or the max overall drawdown on a prop firm, but they're 7-figure traders, some of them 8-figure traders. So it doesn't necessarily mean you're a good trader if you can maintain a prop firm account. It's irrelevant. It's totally different. It's trading gamified. And if we look here at 100 trade runs, you can see now the most profitable system by far is the 1-to-2 system. That one is going to test your psychology, but over a large sample size, the more trades you take, the more money it's going to make. So if you're managing a live fund or your own funds for 12 months, 24 months, 36 months, however long, then this system is going to generate the highest return. And through your data, you'll be able to log each trade, see what your missed potential was on each trade. Maybe you took 1-to-1 on every trade, but the missed potential was 1-to-2 on 75% of your trades. Then you know if you push every trade to 1-to-2, you're going to make more money over the course of a year, 6 months, 12 months, 24 months, however long. But not necessarily on a prop firm challenge. A prop firm challenge could only be 20 trades. It could be less, it could be 9, it could be 6. It depends how well you trade. You know, if it's an 8% profit target, it could be 8 trades at 1-to-1 and it's done. Quite commonly with an 85% win rate, you're going to hit an 8 trade winning streak comfortably and more, 15 plus, you know. So translating this into actual trading and differing between challenge trading, prop firm trading. And when I say prop firm, I mean retail simulated prop firms. You know, these companies that are giving you like a 10% profit target with a 5% max daily drawdown, 10% overall drawdown, versus just managing capital, building a track record, trading over time. The other thing to consider, and I touched on it very briefly just a moment ago, was psychology. So obviously when you go through these areas here, these areas of drawdown, these points where you are losing, how are you going to feel if you stack up 12% of losses? Are you still going to be able to execute your system comfortably, or are you going to start to deviate? Are you going to start to question whether it works? Are you going to strategy hop? You know, I've had students, when we've hit 3 losses in a row, start to question the system, question me as a mentor. It's 3 losses in a row. It's nothing. This would be 12 in a row. Maybe you see more than that. Maybe you have a higher risk reward, lower win rate system, and you're going to hit 15 losses in a row. Are you going to then deviate? You're going to swap to another strategy, and it will affect you because it's money. It's not just a percentage number. You're going to look at that as a monetary value. You're going to look at that as $12,000 down on a 100K account. And $12,000 of loss could be a substantial amount of money to you. That then brings in a whole other psychological element of what do you think is a lot of money? Is $5,000 a good month for you? Or is $20,000 a bad month for you? You know, I know people either ends of the spectrum. I know people that $50,000 in a month income is a slow month. I know other people that think they have a good salary because they make $5,000 a month. You know, it's all relative to your psychology. And for me, this system here and this system here, they are the 2 superior systems for me, especially on prop trading challenges, not necessarily over the long term managing capital, but on psychology, they certainly are even on the long term managing capital. So something to consider, guys, when you go for these prop firm challenges. I would personally try and push the win rate over the risk reward. There'll be loads of systems out there that will be preaching really high risk reward, low win rate. That's great, but if you're not considering what that means in terms of drawdown and whether you're going to probably fail most of the challenges you take, then you're going to slip up, you're going to deviate, you're going to strategy hop, and ultimately you're probably going to quit trading. So understanding this will keep you in the game long term.